Alrighty guys, welcome back to the Best Investing Money Management channel on YouTube. In today's video, I want to talk about, are we at the stock market bottom? Are we at the bottom of this crash? Over the past couple of months, we've seen just crazy amounts of sell-off from virtually almost every single stock. If we look at the general market lately, it's fallen over 18% in value in the matter of 5 months. Now, to classify it as a stock market crash, this is when the market falls 20%. So technically, we are not at a crash or a recession. We're extremely close, but we're technically in a correction. A correction is when the stock market falls 10% or more, and a crash is 20%. So technically we are not at a crash. And a lot of people love to say, oh my gosh, are we at the bottom? Are we at the bottom? I want to buy at that perfect bottom so when the market rebounds, I'm making a ton of money. And there's a couple of things you guys need to understand before we answer that main question. The very first thing is nobody can time the market. I don't care who you are. I can't do it. Warren Buffett can't do it. No one can do it. So for those of you that are saying, oh, Carter, you have to find the bottom, no one knows. The only way to know is if you have a time machine, which unfortunately they do not have. The second thing, time in the market is better than trying to time the market. Now, the reason why I say that is because for me, I am such a long-term investor that I don't care whether the market's going up or down or consolidating. As long as you have a long-term outlook on your investments, you will be successful. The reason why is because if you would have bought in 2007, right before the 2008 crash, guess what? You're up on your money. If you would have bought right up here, right before the March crash of 2020, if you would have bought in February, guess what? You're up on your money. So pretty much as long as you have a long-term outlook on the general US market, you will be successful. So time in the market is better than trying to time the market, but there are some key indicators that you can use to your advantage. The very first one is the average recession or crash is pretty much right at when the market falls about 36%. That is that sweet number. So right now we are at 18%. So given the general stock market should fall around pretty much to this $328 mark. This is on the S&P 500 ETF here. So that would give a crash of right near 36 to 35%. So that is where you guys could start loading up on more shares. But the issue with that is if you wait and try to time it and we have a reversal sooner, you could miss out on some opportunity to make some money. The second thing you need to look at is something called the RSI. So the RSI is called the Relative Strength Index. So pretty much what this is an indicator that technical analysis traders use to get an overall idea of the market, determining if the market's overvalued, undervalued, and everything in between. So right in here, if we actually look at it here, I'll move myself so you guys can see, but right in here, this was the March of 2020 crash. The market went from $327 all the way to $212. That was a crash of right near 36%. Okay, so then we immediately had that rebound. But if you look close, you will notice right down in here is what we call the RSI. So the RSI determines if the stock market is undervalued. So you will notice this 20 right on the right side. So this is determining if the market becomes undervalued. So anytime it falls under that represents good opportunity to buy. So right now you will notice it fell underneath there, and that was literally right in there. So that represented a good time to buy. Another good time to buy was right around here. You'll notice that dip down, we immediately got buying pressure. Another opportunity was right in here during that little dip. So if you look at it, you will notice that there are some key indicators to figure out if the market's undervalued. You'll notice right in here is right around in here. So given that right now the general RSI is right near 30, right at around a 30. So we definitely could see this thing fall a little bit more before we get some buying pressure stepping in. Now, I personally look at a couple of things. I will love to look at the RSI, and I love to look at some big key players of the general market. So lately, we've seen some retail companies get absolutely obliterated on their past earnings. We had Target TGT fall, just at about 30% in a matter of, a couple of days, where it went from 215 all the way to 155 just off of bad earnings. So definitely, I think we will see a turnaround once better earnings start coming out from other companies. That will be a clearer sign that the recession is slowly starting to push itself back and more money is coming out. People are spending and the economy is growing. Target got hit. We saw another company like Walmart get absolutely obliterated here. When we look it up here, I'll show you. You'll notice this thing fell from 150 all the way to 119, one of the largest falls Walmart has seen in a long time. So I definitely think, guys, I personally am going to be looking at the RSI, keeping an eye on some retail earnings because those are the ones that have been getting hit. And overall, just continue to invest, right? And just continue to dollar cost average, invest on a weekly, monthly basis, whatever you guys do. I invest on a weekly basis. And a little twist that I would recommend anytime the market falls more than 6%, double what you normally will put in, because you understand, no matter what, as long as you have a long-term outlook, you will make money, just generally investing. So guys, that is it. Hope you guys enjoyed it. If you did, hit that like button, subscribe. If you have any questions, concerns, ask them down below, and we will see you guys later. Remember to stay happy, stay positive, and stay safe. Take care.